Welcome to The Explainer. Today we're unpacking a truly fascinating top-down analysis of Nomura Holdings, and we're going to look at exactly how they managed to achieve absolute massive growth in a single quarter. We're looking directly at their first quarter results for the fiscal year ending March 2027. Whether you're an investor or you just want to see what a perfect corporate pivot looks like in real time, the numbers we're about to dig into show a firm that is literally firing on all cylinders. If you follow the financial sector, you know that generating meaningful growth requires everything to align perfectly, right? Market conditions, strategy, execution, it all has to click. Well, Nomura really seems to have found that alignment. So let's get right into the data.
97%. Let that sink in for a second. They nearly doubled their net income in just 3 months, hitting 145.6 billion yen. And they pulled this off while delivering a highly impressive return on equity, or ROE, of 15.4%. You know, when a global financial institution of this massive size scales its net income that rapidly, it definitely makes the entire market sit up and take notice.
So, the obvious question here is, what exactly drove this massive surge? To understand a headline number this big, we really have to look under the hood. We need to transition from the macro success of the overall group to the micromechanics of Nomura's day-to-day operation. Specifically, we've got to analyze the 4 main business engines that power this firm and look at how they interacted to produce such a historic quarter. To do that, here's our roadmap. We'll look at 1. A record-breaking first quarter. 2. Wealth management strategic shift. 3. Investment management reaches highs. 4. Wholesale drives record profits. 5. Banking division's steady growth. And finally, 6. A robust financial foundation.
Let's kick things off with Part 1, a record-breaking first quarter. Okay, let's dive into this. Before we look at the individual divisions, you really need to see the sheer scale of the momentum for the group as a whole. Net revenue is up 19% quarter over quarter, hitting 686.7 billion yen. But the real story here? It's the leverage they're getting on that revenue. Income before taxes absolutely skyrocketed by 96% to 211.5 billion yen. Think about that. This isn't just a lucky quarter. This represents the tangible benefits of their ongoing structural reforms steadily reflecting in their actual earnings. They are scaling up their profits incredibly efficiently, and they're doing it without a proportionate explosion in costs.
Moving on to Part 2, Wealth Management's Strategic Shift.
Let's take a look at our first specific growth engine, wealth management. This division saw its income before taxes jump 16% quarter over quarter to 71.1 billion yen. But honestly, the raw profit number kind of buries the lead. The real story here is how they are actually making that money. Nomura has been aggressively moving away from a reliance on flow revenue. You know, those one-off transaction-based fees that tend to swing wildly with market sentiment. Instead, they are pivoting hard toward recurring revenue. This is asset management-based income. It's highly stable, it's highly predictable, and it builds a powerful moat around their earning. And the mechanics of this shift? They're working beautifully. Their recurring revenue cost coverage ratio has now hit 76%. That literally means more than 3/4 of their costs are covered before they even make a single new transaction. And why is that ratio rising so fast? Well, because they secured a massive net inflow of 539.6 billion yen into recurring revenue assets. That is an absolute mountain of new capital seeking stability. Driven by strong growth in investment trusts and discretionary investments, they are rapidly closing in on the core targets they set out in their 2030 management vision.
Next up, Part 3, Investment Management reaches highs. Now, if you thought wealth management had a good quarter, investment management saw a staggering 148% quarter-over-quarter leap in pre-tax income, hitting 45.0 billion yen. That is the highest level since the division was established back in 2021. And a huge driver of that success comes down to one massive number, 156.4 trillion yen. That's their record-high assets under management. The sheer scale of this AUM is generating immense fee-based revenue for them. And importantly, this isn't just a domestic success story. They're seeing solid growth in management fees both in Japan and from their overseas acquired businesses. When we actually break down the revenue for investment management, it reveals 2 distinct narratives. While standard business revenue grew a solid 6% to 86.2 billion yen, investment gains absolutely spiked, jumping 141% to 12.1 billion yen. A significant chunk of this massive jump was driven by substantial contributions from American Century Investments, alongside some really excellent valuation gains on portfolio companies held by their various funds.
Let's look at Part 4. Wholesale drives record profits.
Now, what's really interesting about this breakdown is that the wholesale division posted a record 93.3 billion yen in pre-tax income. That's a 116% jump quarter over quarter. They've been rolling out initiatives to strengthen stability and diversify, and it is clearly paying off. When we dissect that 369.1 billion yen in net revenue, global markets is the absolute heavy lifter here, bringing in 318.7 billion. But we definitely shouldn't ignore investment banking. Even though it's a smaller slice at 50.4 billion yen, this actually represents the best first quarter for investment banking since fiscal year 2016/2017. They achieved this on the back of strong advisory and financing deals, which is super impressive since Q1 is traditionally a slower season for corporate action.
Unpacking that massive global markets chunk a little more, equities revenue climbed to a record high of 179.4 billion yen. And this isn't just a one-hit wonder. This is actually their fourth consecutive quarter of record equities revenue. It really proves their globalized strategy across regions is highly effective and incredibly stable. Meanwhile, fixed income grew 11% to 139.2 billion yen, aided by the steady growth of their international wealth management business, which is successfully diversifying their overall client base.
Moving on to Part 5, Banking Division's Steady Growth.
This brings us to our fourth and final engine. The banking division was only established fairly recently, but it's already pulling its weight, bringing in 15.2 billion yen in net revenue for the quarter. So, how does this build into their broader ecosystem? Well, in April, they successfully launched a highly anticipated deposit sweep service, which is essentially a seamless way to automatically put idle client cash to work. And they are already seeing steady growth in contracts there. Add to that the expansion of Nomura web loans, which is capitalizing on internet banking trends, plus rising trust fees from newly established investment trusts. And you have a highly synergistic banking unit that is perfectly supporting the broader firm.
And finally, Part 6, a robust financial foundation.
So, the crucial point is this. All of these record-breaking revenues and strategic shifts are fantastic, but growth without risk management is, well, it's essentially a house of cards. When we look at Nomura's foundation, however, it is absolute bedrock. Total assets stand at 68.2 trillion yen. Their CET1 capital ratio, which is basically the ultimate stress test metric for a bank's financial strength, is a very healthy 12.9%. And on top of that, they are holding a massive liquidity portfolio of 12.7 trillion yen. They remain incredibly well capitalized to handle market volatility while continuing to aggressively fund the growth engines we've just discussed.
Which leaves us with the ultimate question. We've just analyzed a historic, record-breaking quarter across almost every major division. But is this momentum a one-off event fueled by a perfect storm of market conditions? Or is this the new normal as Nomura structural reforms and 2030 management vision finally take hold? Given that fundamental shift toward recurring revenue we saw, it suggests it might just be the latter. I don't know about you, but I am eagerly waiting to see what their Q2 data reveals. Thank you so much for joining me on this explainer, and keep learning.